unsecured lending. What has changed in the last 5 years?
Earlier, taking loan was a taboo.
Today, he shares his credit report and says, 2 personal loans I have messed up, but can you sort me out because I have more loans to take. Today, I might see no credit cards, but I see personal loans.
People start off with the mindset that they want to farm the cashback on each card. They want to get the lounge access on each card. And then eventually that kind of builds up a pattern of overspending.
What was taboo earlier has become very, very normalized today.
We are sitting on a big bomb, which is like a personal loan portfolio because
Debt is in the air. Everybody is taking debt. Household debt numbers, as we were talking with Kanan, the numbers have become staggering. The RBI has taken note of it, and they have also taken action against a few players for probably unbridled lending, especially unsecured lending. Aparna, talk to us about unsecured lending. What has changed in the last 5 years?
that was a very good question, a good one to start with. So, if I see a trend in the last 5 years, I see more younger lot that is getting into the debt bracket, and there is no qualms about taking debt. Maybe 7-8 years ago, when I would get credit reports and somebody had defaulted on a personal loan, he would be very embarrassed discussing about why he had defaulted. Today, he shares his credit report and says, listen, 2 personal loans I have messed up, but can you sort me out because I have more loans to take. So that to me is a big shift. It's a huge mindset shift. That is number one. Number two, corollary to that, obviously, lot of unsecured loans in every credit report. So today I might see no credit cards, but I see personal loans. To me, that again is a huge shift, because earlier the understanding was you would first take a credit card. Once you warm up to the system and you're not able to manage is where you took a personal loan. But the goal was always to take the home loan next. Today, that is again, that whole algo has changed. So I see lot of reports with no credit cards, but for sure there are personal loans. And last 3 years, in my personal capacity, wherever I am talking in the public forum, I have been telling that we are sitting on a big bomb, which is like a personal loan portfolio, because all of them, education loans stopped. Most of the banks don't give education loans. So higher education, all of that is again personal loan in one garb or the other. Your BNPL is personal loan. Your regular vanilla personal loan is anyway personal loan. Plus there are all these added flavors. So come to think of it, this way or that way, there is personal loan. And that to me is scary, is worrisome.
Ma'am, credit cards are also kind of ubiquitous, right? You look at airport lounges, then you look at maybe the situation, let's say 3 to 4 years back, when if you wanted a credit card, you had to give your salary slips, then you had to give them 2 years of income tax returns. And now it's like nothing. You just take this form, sign, and you have a credit card. And once you have one credit card, then you get multiple, because you want to, people start off with the mindset that they want to farm the cashback on each card. They want to get the lounge access on each card. And then eventually that kind of builds up a pattern of overspending, right? So credit cards are also there.
Kanan, you've got some numbers for us about the absolute size of the entire lending market in India, which is consumer basic. Talk to us about that, please.
So as far as the formal financial lending institutions are concerned, we were at close to 40 lakh crores by the end of financial year 23. The nominal GDP grew at close to 10%. And now the household debt level grew to around 50 to 51 lakh crore rupees odd, which is almost 28-30% more. So if you look at it from that lens, it's of course worrisome, right? So definitely the debt levels have been increasing like anything. And like Aditya was saying, there was a time not very long ago when financial institutions, not just financial institutions, but these, BNPL players or the smaller ones were giving out loans without checking the credit track, not credit track record, but track records like ITR, salary, income and all. But now RBI saw that happening and, penalized a lot of financial institutions, and, they pulled a lot of these new age fintechs as well, that boss, you can't do this because this is going to be a systemic risk otherwise. So as far as the accessibility to credit is concerned, it's really worrisome.
Also, wait, I have a question here. From the 40 lakh crore to 50 lakh crore growth that happened, what percentage is home loans and what percentage is everything else?
As far as I can recall, it's close to 40-50% as far as home loans are concerned. Then auto loans.
More than half is everything that depreciates.
Yeah, nearly, I think 23-24 lakh crore would be home loans, which is the secured bucket. Then you will have about 7-8 lakh crores, which will be the car loans or the vehicle loans. Everything else is unsecured. Right, and there is a gold loan, you can put maybe 3-4 lakh crores or so. That is like another bucket,
Which is again steadily growing. But
which is
then,
also growing.
but
So mota, if you look at it, like 32-33 lakh crore would be secured, and the rest 18 lakh crores will be unsecured. And that is where the major growth is happening. If you look at any bank today, the banks typically credit growths are at around 20%. Industry credit growth is like almost 30%, which means like there are the non-banking growth rates, the fintech growth rates, the unsecured growth rates, they are like much more.
And
And if-
mind you, this is the formal growth rate,
This is formal growth rate, of course.
which is recorded in the books. So there are a lot of unsecured informal lenders as well, which we are not typically seeing growing in these numbers. So that is also a worrisome factor, which are called the loan sharks and all.
Right.
So RBI plugged this thing as well, that the loans are growing at such fast pace and the accessibility is becoming such so more easier for the loan sharks to access these loans, and then they are doling out those loans at 60-70% IRR. So that's all the more worrisome.
So, Parijat, I wanted to come to you since you're a fintech consultant. How much of this growth has been driven by technology? And by technology, I mean telecom as well as technology. Because that seems to have been a driver. That's what makes it different this time around.
Absolutely. Absolutely. I think this growth in unsecured is for two reasons. One is the tech and the telecom and the infrastructure that's available, including the DPI that we speak about. Right. What has happened is the cost has come down. The innovations can happen at a much faster pace. So every lender is able to innovate new products, low value products at a very, very fast pace. So earlier, a lender could not have imagined giving a personal loan of under 50,000 rupees because that would have not been financially viable. But today, offering a 3,000 rupee loan or a 5,000 rupee loan is possible because of technology. You can do it remotely without actually having any touch points. You can actually lower down your assessments because you can use the data available publicly. All of that has made a change. And the second factor is the attitude or the viewpoint that I think Aparna was talking about, that earlier taking loan was a taboo, right? Earlier, like if I was building an asset, I'll go and tom-tom about it. But if I'm taking a loan or if I have a credit, like I'll not really be talking about how many credit cards do I have. But today, if you look at social media, you can find people talking about it. I have so many credit cards, how I effectively use my credit card. It's a very common thing. It's like very, very normal. So what was taboo earlier has become very, very normalized today.